Introduction. Hi everyone, and welcome to this educational video about the risks of naked calls and what we can learn from a real-life example. In this video, we'll be delving into the story of a retail investor who lost a significant portion of his portfolio due to this risky option strategy. We'll break down the key concepts, explore the potential pitfalls, and discuss valuable takeaways that can help you make informed investment decisions. The story, a cautionary tale. Our story begins with a retail investor who decides to sell naked calls on AMC stock. Naked calls are a type of options contract where the seller grants the buyer the right, but not the obligation, to buy a certain number of shares at a specific price by a certain date. However, unlike covered calls where the seller owns the underlying shares, the seller of a naked call does not own the shares, exposing them to potentially unlimited losses if the stock price rises above the strike price. In this case, the investor, aware of the risks but underestimating the potential consequences, sold a significant number of naked calls on AMC stock. Unfortunately, AMC experienced a gamma squeeze, a rapid increase in stock price driven by buying from options traders. This caused the price of the naked calls to skyrocket, resulting in substantial losses for the investor, who ultimately lost $650,000 and was forced to liquidate her portfolio. Understanding the risks of naked calls. While the story we discussed is an extreme example, it serves as a powerful reminder of the inherent risks associated with naked calls. Here are some key points to remember. Unlimited loss potential. Unlike other option strategies, naked calls expose you to the possibility of unlimited losses if the stock price rises above the strike price. There's no cap on how much you can lose, making it a highly risky strategy. Time decay. The value of a naked call depreciates over time as the expiration date approaches, even if the stock price remains unchanged. This time pressure can exacerbate losses if the stock price doesn't move in your favor before the option expires. Volatility sensitivity. Naked calls are highly sensitive to volatility. If the stock price becomes more volatile, the value of the naked call can fluctuate significantly, making it challenging to manage risk effectively. Margin requirements. Brokers typically require higher margin requirements for naked calls compared to other option strategies. This means you need to have more capital in your account to cover potential losses, further increasing the financial burden. Key takeaways and lessons learned. Now that we've explored the risks, let's delve into the valuable lessons we can learn from this cautionary tale. Thorough risk assessment. Before employing any option strategy, especially complex ones like naked calls, it's crucial to conduct a thorough risk assessment. Understand the potential downsides and ensure you have the financial capacity to withstand potential losses. Risk management strategies. Implement robust risk management strategies, such as setting stop-loss orders and limiting the amount of capital you allocate to any single trade. This helps mitigate potential losses and protects your overall portfolio. Know your limits. Not all investors have the risk tolerance or experience for naked calls. If you're a new or inexperienced investor, it's advisable to stick to simpler option strategies until you gain more knowledge and confidence. Avoid emotional trading. Refrain from making investment decisions based on emotions like fear or greed. Stick to your trading plan and avoid chasing losses, as this can lead to even bigger setbacks. Seek professional guidance. If you're considering using naked calls, consulting with a qualified financial advisor can be immensely beneficial. They can provide personalized guidance based on your financial situation and risk tolerance. Conclusion. The story we discussed serves as a stark reminder of the importance of responsible investing and understanding the inherent risks involved in options trading, particularly with complex strategies like naked calls. By carefully considering the risks, implementing sound risk management practices, and seeking professional guidance when needed, you can make informed investment decisions and navigate the financial markets with greater prudence. Remember, knowledge is power, and by equipping yourself with the right information and strategies, you can make informed investment decisions and achieve your financial goals. Thank you for joining me in this educational exploration of naked calls. If you have any questions, feel free to leave them in the comments below. Hope you're able to obtain value in this video. Take care and I see you in my next video.